Based on the historical data and forecast, Bitcoin has been fluctuating within a range, with support at $108,100 and resistance around $114,000. The RSI indicates that the asset is currently neither significantly oversold nor overbought, hovering around the 40 to 50 range. The Bollinger Bands show a contraction, suggesting a potential breakout. Given this, I propose a moderately bullish strategy. We will enter a long position at $111,400, coinciding with the first forecast price. A stop-loss order will be placed at $108,100, just below the established support level, to limit potential losses. The initial target price will be $112,200, aligning with the forecast price on September 11, 2025, and the upper band of Bollinger Bands. To refine this strategy, we will incorporate RSI signals. If the price retraces and RSI falls below 20, indicating an oversold condition, we will enter a long position at the lowest price. If the price rises and RSI exceeds 80, indicating an overbought condition, we will take profits. The portfolio will prioritize the Bollinger Bands breakout strategy as the primary signal, with RSI acting as a secondary confirmation. If the price breaks above the upper Bollinger Band, we will adjust the target price to $114,000, aiming for the resistance level. This combined approach aims to capitalize on both trend following and momentum opportunities, maximizing potential returns while managing risk effectively. Based on the historical data and forecast, Ethereum exhibits a sideways trend with fluctuations around the 4,300 to 4,450 range. The RSI consistently hovers around 50, indicating neither strong overbought nor oversold conditions. However, the forecast suggests a potential slight upward movement, initially testing 4,370 then 4,360 before stabilizing around 4,320. Considering the support at 4,270 and resistance at 4,450, I propose a strategy focusing on short-term pullbacks. Specifically, when the price dips near the support level of 4,270, enter a long position at 4,280. Set a stop-loss at 4,250 to mitigate potential losses. The initial target price is 4,380, aligning with the forecast and a reasonable upward movement. To refine this strategy, we incorporate the Bollinger Bands. The price has been trading within the bands, indicating volatility. When the price touches the bottom of the Bollinger Bands around 4030 to 4070, it signals a potential oversold condition, creating a favorable entry point. Enter a long position at 4060, with a stop-loss at 4040. A more aggressive target price is 4,390, capitalizing on the potential rebound. Combining the RSI and Bollinger Bands, the most efficient portfolio involves allocating 60% to the RSI-based strategy, entry 4280, stop-loss 4250, target 4380, and 40% to the Bollinger Bands-based strategy, entry 4060, stop-loss 4040, target 4390. This diversified approach balances risk and reward, aiming for high returns within a defined range. Based on the historical data and forecast, XRP has been exhibiting a slight upward trend, with support consistently around $2.8 and resistance fluctuating around $3.07. The RSI has mostly been in the middle range, occasionally dipping below 40, indicating potential oversold conditions. The Bollinger Bands show periods of volatility, with the price occasionally touching the lower band, suggesting possible buying opportunities. My recommended strategy is a combined approach leveraging RSI and Bollinger Bands. First, we will implement a long position when the RSI dips below 20, indicating an oversold condition, and the price touches the lower Bollinger Band. We will enter a long position at $2.7. The stop-loss will be set just below the lower Bollinger Band at $2.69 to limit potential losses. The initial target price will be set at the resistance level of $3.07, aiming for a quick profit. To refine this strategy, we will incorporate the forecast data. The forecast predicts a gradual increase in price, with values around $2.99 by September 15, 2025. Therefore, after reaching the initial target price of $3.07, we will move the stop-loss to break-even, around $2.8, to protect profits. If the price continues to rise, we will set a second target price at $3.01. If the price fails to reach $3.07 and starts to decline, we will exit the position at $2.9. This combined strategy balances risk and reward, capitalizing on oversold conditions while considering the overall upward trend and forecast data, ensuring a high return investment. Based on the historical data and forecast, BNB shows a generally upward trend, consolidating between the support of $847 and the resistance of $898. The RSI fluctuates between 51.1 and 59.7, indicating neither extreme overbought nor oversold conditions for most of the period. The Bollinger Bands show the price moving within the bands, with the recent close price nearing the upper band, suggesting potential for a temporary pullback. Considering these factors, I recommend a long position with an entry price of $874. A stop loss should be set at $847, just below the support level, to protect against a significant downturn. The initial target price is $898, aligning with the resistance level. To refine the strategy, we can incorporate the RSI and Bollinger Band signals. When the RSI dips below 50 and the price touches the lower Bollinger Band, it signals a potential buying opportunity. Conversely, when the RSI approaches 80 and the price reaches the upper Bollinger Band, it suggests a possible short-term selling opportunity. Given the forecast prices, I anticipate the price to reach $892 to $898 by September 15, 2025. Therefore, a secondary target price can be set at $892, and if the price continues to rise, we can adjust the target to $898. This combined strategy balances risk and reward, capitalizing on the upward trend while incorporating technical indicators for more precise entry and exit points. Based on the historical data and forecast, Solana shows a generally upward trend, supported by consistent resistance above $200 and a forecast indicating further price increases. The RSI fluctuating around 55 to 60 suggests the asset is neither significantly overbought nor oversold. Considering the forecast prices, I recommend a long position strategy. Entry price will be $213. The stop loss will be set at $206, just below the support level, to limit potential losses. The initial target price is $225, aligning with the forecast for September 15, 2025. To refine this strategy, we will incorporate the Bollinger Bands. The price consistently staying near the upper band suggests bullish momentum. Therefore, if the price reaches $225, we will move the stop loss to the center of the Bollinger Bands, which is around $201, securing profits while allowing for continued upward movement. If the price drops to $206, the position will be closed. This combined strategy leverages both RSI and Bollinger Bands to maximize returns while mitigating risk. Based on the historical data and forecast, Dogecoin shows a slight upward trend. The RSI fluctuates between 45.3 and 60.2, indicating periods of both oversold and overbought conditions. The Bollinger Bands have been widening recently, suggesting increased volatility. Considering these factors, I propose a combined strategy incorporating RSI, Bollinger Bands, and support/resistance levels. The primary strategy will be based on the RSI. When the RSI falls below 20, it signals an oversold condition, and we will enter a long position. However, given the recent price action, a more conservative approach is warranted. We will enter a long position when the RSI drops below 40. Specifically, let's initiate a long position on September 10, 2025, when the forecast price is $0.226 and the RSI is predicted to be below 40. The entry price will be $0.226. We will set a stop-loss order at $0.217, just below the support price of $0.224, to limit potential losses. The target price will be $0.241, aligning with the upper Bollinger Band and the recent resistance level. This provides a potential profit of $0.015. This strategy balances risk and reward, capitalizing on the anticipated upward trend while incorporating safeguards against adverse price movements. The portfolio will prioritize this RSI-based strategy due to its clear entry and exit signals, combined with the volatility indicated by the Bollinger Bands. Based on the historical data and forecast, Cardano exhibits a slight upward trend. The price has consistently bounced off the support level of $0.81, indicating strong buying pressure at that level. The RSI fluctuates between 43.9 and 54.8, suggesting periods of both oversold and overbought conditions. The Bollinger Bands show that the price has recently been approaching the lower band, potentially indicating an oversold condition. Considering this, I propose a long entry strategy at $0.857. A stop loss should be placed just below the support level at $0.807 to protect against a potential breakdown. The initial target price is set at the nearest resistance level of $0.89, which aligns with the forecast for September 15, 2025. To refine the strategy, we can incorporate the RSI and Bollinger Band signals. If the RSI dips below 20, consider a long entry, but with a tighter stop loss near the $0.81 support. Conversely, if the price touches the upper Bollinger Band and the RSI exceeds 80, a short position could be considered, but this is not the primary focus given the current upward trend. The most efficient portfolio combines the initial long entry with adjustments based on RSI and Bollinger Bands. Therefore, the final strategy is to enter long at $0.857, set a stop loss at $0.807, and target $0.89. This strategy balances trend following with reactive adjustments to maximize returns while minimizing risk. Based on the historical data and forecast, TRON shows a downtrend with recent consolidation. The RSI consistently dips below 50, reaching a low of 32.3, indicating an oversold condition. The Bollinger Bands are narrowing, suggesting a period of low volatility followed by a potential breakout. The forecast prices continue the downtrend, predicting a further decrease. Therefore, a short position is warranted, capitalizing on the downward momentum. My recommended strategy is a short position with an entry price of $0.330. Given the oversold RSI and the narrowing Bollinger Bands, a tight stop loss is crucial. Set a stop loss at $0.337, just above the recent resistance level. The initial target price is $0.322, aligning with the forecast price and the support level. If the price breaks below $0.322, consider adjusting the target price to $0.321 to capture further potential downside. This strategy combines RSI signals, Bollinger Bands analysis, and forecast data for a high probability, high return trade. Based on the historical data and forecast, Chainlink shows a slightly upward trend with periods of consolidation. The RSI consistently fluctuates around the 50 level, indicating neither strong overbought nor oversold conditions. However, the forecast data suggests a gradual increase in price, potentially reaching $24.3. Considering the support price of $22.2 and resistance of $26.8, we can implement a strategy focusing on short-term price movements. We will use a combined RSI and Bollinger Band strategy. When the RSI drops below 40, indicating an oversold condition, we will enter a long position at $23.1. The stop loss will be set at $22.5, just below the support level, and the initial target price will be $24.3, aligning with the forecast and the upper Bollinger Band. To maximize potential returns, we will implement a dynamic target price strategy. If the price reaches $24.3, we will move the stop loss to break even at $23.1. We will then set a new target price at $25.2, near the resistance level. If the price fails to reach $24.3 and the RSI rises above 60, indicating an overbought condition, we will exit the position at $23.7. This combined strategy aims to capitalize on short-term upward movements while mitigating risk through strategic stop-loss placements and dynamic target adjustments, potentially achieving high returns. Based on the historical data and forecast, Wrapped Beacon ETH has shown a volatile trend with periods of consolidation. The RSI consistently fluctuating around the 50 mark suggests a neutral to slightly bearish momentum. The Bollinger Bands indicate increasing volatility, with the bands widening over the past 2 weeks. The forecast for the next week shows a slight downward trend initially, followed by potential stabilization. Considering these factors, I recommend a cautious strategy focusing on short-term opportunities. My proposed strategy involves a combination of RSI and Bollinger Band signals. We will initiate a short position at $4,700, anticipating a potential dip based on the forecast. A stop loss will be set at $4,720 to protect against unexpected upward movements. The initial target price will be $4,640, aligning with the lower end of the forecast range and a key support level. If the price breaks through the $4,640 level, we can consider adjusting the target price to $4,600, the strong support level, to maximize potential gains. This strategy aims to capitalize on short-term volatility while mitigating risk through strategic stop-loss placement. Based on the historical data and forecast, Bittensor shows a volatile trend with periods of consolidation and upward movement. The RSI consistently fluctuates around the 40 mark, indicating a neutral to slightly bearish sentiment. The Bollinger Bands have widened recently, suggesting increased volatility and potential for price swings. Considering the support at $336 and resistance at $371, and the forecast predicting a rise to $346, I propose a moderately bullish strategy. We will initiate a long position when the RSI dips below 40, aiming to capitalize on potential rebounds. Specifically, I recommend entering a long position at $326. Given the recent volatility and the potential for a pullback, a stop loss should be placed just below the support level at $335. The initial target price will be set at $344, aligning with the recent high. If the price continues to rise and breaks through the $344 resistance, we will adjust the target price to $347, based on the forecast. This strategy combines RSI signals for entry, Bollinger Bands for volatility awareness, and support/resistance levels for price targets, aiming for a balance between risk and reward. Based on the historical data and forecast, Dogecoin shows a slight upward trend. The RSI fluctuates between 45.3 and 60.2, indicating periods of both oversold and overbought conditions. The Bollinger Bands have been widening recently, suggesting increased volatility. Considering these factors, I propose a combined strategy incorporating RSI, Bollinger Bands, and support/resistance levels. The primary strategy will be based on the RSI. When the RSI falls below 20, it signals an oversold condition, and we will enter a long position. However, given the recent price action, a more conservative approach is warranted. We will enter a long position when the RSI drops below 40. Specifically, let's initiate a long position on September 10, 2025, when the forecast price is $0.226 and the RSI is predicted to be below 40. The entry price will be $0.226. We will set a stop-loss order at $0.217, just below the support price of $0.224, to limit potential losses. The target price will be $0.241, aligning with the upper Bollinger Band and the recent resistance level. This provides a potential profit of $0.015. This strategy balances risk and reward, capitalizing on the anticipated upward trend while incorporating safeguards against adverse price movements. The portfolio will prioritize this RSI-based strategy due to its clear entry and exit signals, combined with the volatility indicated by the Bollinger Bands. Based on the historical data and forecast, Ethena shows a clear upward trend. The price has consistently moved above the Bollinger Band center, indicating bullish momentum. The RSI values have generally been above 50, further supporting the upward trend, although it has fluctuated. The forecast data projects continued price increases, reaching $0.811. Considering these factors, I recommend a long position strategy. We will enter a long position at $0.737, placing a stop-loss order at $0.716, just below the support price, to limit potential losses. The initial target price will be $0.808, aligning with the forecast high. To refine the strategy, we will incorporate the RSI and Bollinger Band signals. When the RSI dips below 40, consider a partial profit taking at $0.752 and adjust the stop-loss to the recent swing low. As the price approaches the upper Bollinger Band, around $0.796, consider another partial profit taking and further tighten the stop loss. The final target price will be $0.811, capitalizing on the projected forecast. This blended approach combines trend following with tactical adjustments based on momentum and volatility indicators, aiming for high returns while managing risk effectively. Based on the historical data and forecast, FLOKI shows a slightly decreasing trend with fluctuating prices. The RSI indicates that the asset is currently not significantly oversold or overbought, hovering around the 40 to 50 range. The Bollinger Bands have been narrowing recently, suggesting decreasing volatility. Considering these factors, a moderately bullish strategy is recommended. We will implement a strategy based on the forecast data and Bollinger Bands. The forecast data suggests a price range between $0.0000909 and $0.0000933. We will enter a long position at $0.0000909, placing a stop-loss order at $0.0000884, which is the support level. The initial target price will be set at $0.0000933, aligning with the upper end of the forecast range. To refine this strategy, we'll incorporate the Bollinger Bands. If the price touches the lower band, $0.0000864, it could signal a potential bounce, reinforcing our entry point. Conversely, if the price breaks above the upper band, $0.0000961, it might indicate further upside potential, prompting us to adjust the target price to $0.0000980. This combined approach, using both forecast data and Bollinger Bands, aims to maximize potential returns while mitigating risk. The portfolio will be 60% long position, 20% stop loss, and 20% target price. This will create an efficient and high return investment. Based on the historical data and forecast, Render shows a fluctuating trend with periods of consolidation. The RSI consistently stays within the 40 to 55 range, indicating neither strong overbought nor oversold conditions. The Bollinger Bands have been narrowing recently, suggesting a period of low volatility. The forecast for the next week predicts a slight upward movement, with prices hovering around $3.51 to $3.61. Considering these factors, I recommend a moderately bullish strategy focusing on short-term gains. We will implement a combined strategy incorporating RSI and Bollinger Bands, prioritizing entries near the support level and utilizing the bands for price targets. The entry price will be $3.51, coinciding with the first day of the forecast and near the support price of $3.54. A stop loss will be placed at $3.43, just below the bottom of the Bollinger Band for September 9, 2025, to limit potential losses. The initial target price will be $3.61, aligning with the highest forecast price for the week. If the price reaches $3.61, we will move the stop loss to the entry price of $3.51 to secure profits. A second target price of $3.63 will be set if the price continues to rise, and the stop loss will be adjusted accordingly to protect gains. This combined strategy balances risk and reward, capitalizing on the anticipated upward trend while incorporating safety measures through stop-loss levels. Based on the historical data and forecast, Arweave shows a slight upward trend with periods of volatility. The RSI consistently fluctuates around the 45 mark, indicating neither strong overbought nor oversold conditions. However, the Bollinger Bands suggest potential entry points. The price has been testing the support level of $6.68, and the forecast predicts prices hovering around $6.65 to $6.92. Therefore, a strategy combining RSI and Bollinger Bands is recommended. I suggest a long position when the price touches the bottom of the Bollinger Bands, which is currently around $5.88. Set a stop loss at $5.85, just below the band, and a target price at the resistance level of $7.22. This strategy aims to capitalize on potential rebounds from the support and the lower Bollinger Band, while the stop loss minimizes potential losses. To enhance the strategy, we can incorporate an RSI filter. Only initiate the long position if the RSI is below 40. This helps avoid entering during potential false signals. Considering the forecast, if the price reaches $6.88, we can consider taking partial profits while maintaining a portion of the position to potentially capture further upside. The refined strategy involves entering a long position at $5.88 when the RSI is below 40, setting a stop loss at $5.85, targeting $7.22, and taking partial profits at $6.88. This multi-layered approach balances risk and reward for high returns. Based on the historical data and forecast, Pudgy Penguin shows a slight upward trend with periods of consolidation. The RSI values fluctuate between 41 and 56, indicating neither strong overbought nor oversold conditions consistently. The Bollinger Bands have been narrowing recently, suggesting decreasing volatility. The forecast prices predict a continued upward trajectory, hovering around $0.03. Considering these factors, I propose a moderately bullish strategy. We will initiate a long position when the RSI dips below 40, aiming to capitalize on potential rebounds. Specifically, we'll enter a long position at $0.0286. To manage risk, the stop loss will be set at $0.026, just below the lower Bollinger Band. The target price will be $0.034, aligning with the recent resistance level and the upper Bollinger Band. To refine the portfolio, I'll incorporate a dynamic adjustment based on the Bollinger Bands. If the price breaks above the upper band, we'll move the stop loss to the center band to secure profits. Conversely, if the price falls below the lower band, we'll exit the position to minimize losses. This adaptive approach combines the RSI-driven entry with the Bollinger Band's volatility signals for enhanced risk management and profit optimization. This strategy aims for high returns by leveraging short-term price movements while incorporating volatility-based adjustments for a more robust and adaptable investment approach. Based on the historical data and forecast, Bonk shows a mixed trend with periods of both upward and downward movement. The RSI consistently fluctuates around 40, occasionally dipping below 40 and exceeding 50, indicating indecision in the market. The Bollinger Bands have been narrowing recently, suggesting a potential for increased volatility. Given the current RSI of 54.2 and the forecast prices showing a slight upward trend, I recommend a long position with a cautious approach. Entry price should be set at $0.0000205. A stop-loss order should be placed just below the lower Bollinger Band at $0.0000189 to protect against a sudden downturn. The target price for this trade is set at $0.0000222, aiming for a modest profit while acknowledging the current market uncertainty. This strategy combines the RSI and Bollinger Band signals. If the RSI falls below 40, indicating an oversold condition, we will consider a short position. Conversely, if the price touches the upper Bollinger Band, we will take profit. This portfolio prioritizes risk management and aims for steady, albeit moderate, gains in the current market environment. Based on the historical data and forecast, Virtual's protocol shows a fluctuating trend with a recent upward momentum. The price has bounced around the support level of $1.17, indicating potential buying opportunities. The RSI consistently remains between 40 and 55, suggesting that the asset is neither excessively overbought nor oversold. The Bollinger Bands show a narrowing trend, which could indicate increased volatility in the near future. Given this analysis, I propose a combined strategy utilizing RSI and Bollinger Bands. We will initiate a long position when the price touches the support level of $1.17 and the RSI falls below 40. The stop loss will be set slightly below the support at $1.16 to protect against potential downside risks. Our target price will be $1.28, aligning with the recent resistance level. To refine the strategy, we will incorporate the Bollinger Bands. If the price touches the support of $1.17 and the RSI is below 40, and the price is also near the lower band, we will enter a long position at $1.17. The stop loss will be placed at $1.16. The initial target price is $1.22, which is the forecasted price for September 15, 2025. If the price reaches $1.22, we will move the stop loss to the entry price of $1.17 to secure profits and manage risk. This combined approach leverages both momentum indicators and volatility bands for a more robust and adaptable trading strategy, aiming for high returns while mitigating potential losses. Based on the historical data and forecast, Worldcoin exhibits a strong upward trend, particularly evident in the recent surge to $1.63. The RSI reaching 79.9 indicates an overbought condition, suggesting a potential pullback before further advancement. However, the forecast data projects continued price increases, reaching $1.58 by September 15, 2025. Considering these factors, I recommend a long position strategy. Entry price should be $1.16, placing the stop loss at $1.05 to protect against a potential pullback. The initial target price should be $1.39, aligning with the forecast data and the upper Bollinger Band. To maximize returns, we will implement a dynamic target price strategy. Once the initial target of $1.39 is reached, we will move the stop loss to the entry price of $1.16, securing profits and allowing for further gains. If the price continues to rise, we will adjust the target price to $1.45, capitalizing on the upward momentum. This strategy combines RSI signals, Bollinger Band analysis, and forecast data to create a high probability, high reward investment opportunity. The support price of $1.4 should also be considered as a secondary support level,